Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a breakdown of the action in today's session, where we saw stocks slide a little bit after we saw a pretty bullish day on Thursday. But Ed, bank stocks continuing to have a tough time today, especially the regional banks.
Yeah, there is one-day relief, and we saw that boost the market, but not today. Very divergent market rally. Want to look at three stocks that are doing relatively well: Air Test Systems, PDD, and Lennar.
All right, we'll take a look at those stocks, but first, let's analyze the major indexes. So the Nasdaq today down about 0.7%, but it was not the hardest hit. We had the S&P 500 down 1.1%, the Dow off 1.2%, and the Russell 2000 small cap index with heavy exposure to the financial sector down 2.6%, leading up to the close here. So we did see a downside reversal for the Nasdaq that we are showing here after a 4-day win streak. So as you said, Ed, we have a very divergent market right now because the Nasdaq and the tech sector are looking quite constructive, while we're not seeing such positive signals elsewhere.
Yeah, I mean, you could talk about just the Nasdaq rose 4.4% this week, so pretty darn strong here. It's above all the moving averages. Yeah, we had a downside reversal today, but honestly, after that kind of gain, it's really a good move. I mean, look, it's not rip roaring, it's not above everything, but as you say, very constructive. A lot of tech stocks flashed buy signals this week. A lot of ones that had already gone kept powering higher. So if this were the market, we'd be pretty happy with how things are going. It wasn't, we almost had a fall through day. Well, we didn't almost. We had some strong gains. We didn't have a fall through day, which is probably for the best given how divergent this market is. We did, because the volume was lighter than normal, but the rally attempt is still ongoing. Very constructive, but very different story elsewhere.
Yeah, so let's take a look. Here is the S&P, a day of strength on Thursday as well, but it is not above those moving averages like what we're seeing for the Nasdaq, nor has it convincingly cleared even, the majority of a trend line, even a more aggressive angle perhaps, but still below a lot of key levels here. So not clear that we are indeed in a rip-roaring rally for the S&P, Ed.
Yeah, this shows something mixed because it was up for the week, but it's below all the moving averages. It has tech, it has the other things, so it's in between. So this is okay. It just wasn't great, but yeah, so this is sort of like the S&P tends to have both, that mixed view.
Mm-hmm. But I guess constructive in terms of where we closed. If you look at like the intra-week action, I mean, we were at risk of really undercutting. So to see at least us hold from the lowest levels of the week as we kicked off the week, good to see that at least things falling, continuing to see that waterfall infect other parts of the market outside of financials just yet.
Yeah, that's a really good point. That Monday was sort of the low, certainly on the S&P and Nasdaq, and we rallied off of that. It'll be interesting to see. Again, this weekend's going to be really important. Next few days, really important to see if we can, which way we go on this.
Yeah, let's also take a look at the Dow and the Russell. So not as convincing of a bounce here. For the week, it looks like, roughly flat, maybe slightly lower to the downside. So not seeing strength there in blue chip land, and having an even tougher time in the small caps. Here's the Russell 2000 ETF IWM for the week, down about 2.7% or so on top of the previous weekly decline of 8%. But again, a lot of financial exposure here, Ed. So not a surprise to see small caps having a tough go at it.
Yeah, another big area is energy, which is terrible, as we're going to look at as well.
Yes. Good point there. Let's take a look at 0TNX. This is tracking the 10-year Treasury yield, which we've seen all over the place and mainly to the downside for this week. So now we have two weekly big red bars in a row. This week down 8% after so even a steeper of a decline than last week's decline of almost 7%. So what is this telling us, Ed?
Well, there's a massive safe haven flow going on. There's concerns about the economy. There's, just thinking that there's going to be longer term repercussions from this, or even just short term. The 2-year yield fell 74 basis points this week, and that's after a pretty big drop. It was the worst drop since 1987, right after the 1987 Black Monday crash. So enormous drops here. If things clear up, the yields will rebound. Actually, on a daily chart, there were, I think, almost every day here, like it was big swings day to day. So,
right.
I mean, if things get better, you could see that yield jump 20, 30 basis points in a day. It wouldn't be wouldn't be crazy. But we're also near those lows as well. It's the markets are showing a lot of stress. I was reading about that, a couple of days ago, that there were starting to be concerns about liquidity in U.S. Treasuries, and that is just like the most deep. That's like saying the deepest lake in the world is running dry. That just doesn't run out of liquidity. If that goes illiquid, everything does. So there's a lot of stresses going on in the market.
Mm-hmm. So with that being said, Ed, what would be the repercussions of that, or at the very least the reaction to that if that does turn out to be a major concern?
Well, I think it would be really scary, because if you feel like you can't trade, if you can't operate, if you can't make transactions or deals, that could freeze up that could just make it worse. Like everything could really waterfall at that point. But they would probably take steps. I don't think they're really there yet, but just remember that in the financial crisis, money market funds were suddenly seizing up. You don't always know. It's like, a few days ago, we weren't thinking about Credit Suisse. I mean, it hasn't been doing well for a long time, so don't get me wrong, but these things come in. It's like, we don't know what the next shoe to drop is, whether it's a bank or financial market. Maybe there will be nothing. Maybe this is it. Maybe everything's going to be fine now. But yeah, it's at this times, then people start getting that sign that it can steamroll, and problems can create problems.
Well, we'll circle back to this
Yeah.
at the end of the segment. So we'll put a pin in that. Let's keep looking at some ETFs. Here's SMH reversing a smidge lower on Friday, but for the week up 5.4%. So chip stocks continuing to flex their strength in this market.
A lot of strength, top tier names, mid tier names, a lot of strength. This was an outside up, reversal week, so really bullish.
Yes. Elsewhere, IGV, this is the tech software ETF, also had a good week, up 4.8%. XLF, though, down another 6%, and even heavier volume than the prior week when it was down 8.5%. KRE, even worse, I think now down 30% or so in just the last 2 weeks. For an ETF.
Yeah. For an ETF, KRE is moving. They're all selling off, even some pretty big names. And it's there's a lot of concern. There's even concern down the road that even if everything goes well, that banks are going to be a lot less profitable. So it's not that also is people going, well, what's the upside? Why should I buy this? So yeah, it's a lot of concerns.
And let's take a look at XME, the metals and mining ETF, now on a 2-week losing streak, down almost 6% this week in heavy volume for a second week in a row. And you mentioned energy, also an area of pretty notable weakness this week, with XLE down almost 7%, as we see oil having a really tough time with the USO, a proxy for crude oil, down 13%.
Yeah, it's the lowest since the end of 2021, really falling out. So it's showing those concerns that things could get there with the economy if these kind of issues keep on going.
All right, well, let's take a look at 3 individual stocks on our radar. Here is AEHR, which by the end of this week has a flat base, correct, Ed?
It has a base. I'm not sure why. We're not going to call it a flat base because of that crazy day, but it's 6 weeks long. It was probably too steep even without that crazy day. That was the day after Tesla's investor day, and they said, oh, maybe we won't use as much silicon carbide.
Right.
And all those silicon carbide plays tumbled, but they came back. This is a crazy wild stock. Let's be absolutely clear. Not that you need me to say that. You can just look at it and see that. Strong, powerful growth, but it's right near the 50-day line. You do have that trend line. I mean, I certainly wouldn't wait for a breakout on something like this because of the big ups and downs. It does tend to undercut the prior base or prior consolidation at some point. So if you were going to buy it, somewhere around here or around that trend line would seem to be a place to go. It would be a risky trade. It's a risky market, but there's not many opportunities to buy this one. So I wanted to bring it up. And ideally this consolidates or it doesn't go until the market shows real strength. But it's something that investors should be aware of, even if they say, you know what, I'm just going to stand back from this one at this time.
Yeah, because we are seeing stocks elsewhere in the semiconductor sector that are extended. So this is a stock that has relative strength in spades, albeit it's a bucking bronco, as I like to say. So yeah, buyer beware, manage your risk, but it's right at a moving average. You're exactly right. Know the personality of these stocks. Let's also take a look at PDD Holdings now, Chinese e-commerce stock, up 7% this week as it works on the right side of a base, right around the moving average. And we've got earnings coming up next week, so potentially a catalyst for the stock. And this is probably the best looking China name right now, at least it's on our radar.
Yeah, I mean, there's a few names that are looking okay, but this is probably the best and definitely versus its rivals. So that's a concern. I mean, why is this one doing, it's one thing to outperform, but again, it's a little bit like the market. It's like, why is this one doing well and the other ones are falling, And so nonetheless, this has been growing very well. It's hit the sweet spot with its value-oriented e-commerce. A strong move above this week's highs or kind of things would break a trend line, provide maybe an early entry. It'll have earnings before the open, so at least you can't get ahead of yourself probably. I mean, it's like you can't be tempted to buy it at this point. So we'll have to see how that goes. I mean, but yeah, there's a lot of risk when you combine the market, when you combine its rivals, when say China. Again, a very risky play. I definitely want to stress that about PDD.
Let's also take a look at Lennar, a home builder, down on the day, but a nice week this week with an RS line blue dot. This is underscoring that outperformance versus the S&P 500 as it works on a new base. The fact that we're seeing that RS line at a new high before this stock hits a new price high is bullish. On a weekly basis, shares up over 6%. And look at that, some nice volume there as well behind this week's move.
Yeah, so those are a lot of really good things. Their earnings were better than expected. They had pretty good guidance. It's not going to be a great year. It's a little bit like some of these chip names where people know that the earnings are going to be lousy this year because of what, demand before. But these home builders are doing well. Treasury yields coming down are definitely helping on that regard. People, even if the crisis fades, you probably figure the Fed isn't going to raise rates quite as high as maybe people thought a couple of weeks ago. They did have a downside reversal on Wednesday following earnings, so that was a little disappointing. But it basically closed near the weekly highs, so it bounced back from that. It held support at the 50-day line, so it's been acting constructively. Nonetheless, and there was high volume, but that's partly today, but that was partly because of the options that expired today. It didn't move a whole lot. So yeah, I think this is one area. The home builders are one area that is actually doing well aside from chips and a few other techs.
Good notes there. All right. Well, circling back to the market and plan of action before we go. I mean, Ed, with concerns about liquidity in the market, and like you said, we're going to get a lot of news over the weekend on the banking crisis front. Should we be looking at these technical signals that we're seeing in the growth area and QQQ, or should we be putting all of our money under our mattresses if the financial system's going to freeze up?
Yeah, I don't know if you have to worry about quite about that, but it is, you can go either way. You can certainly, if you wanted to, you could have been playing some of these growth names because there are a lot that are showing buy signals. You would probably want to keep your exposure light. I would not And I certainly wouldn't say like put all your money into chips, especially EV chip makers, and like a handful of those. On the other end, but you could also wait for a follow through day, and hopefully a follow through day would not just show the Nasdaq doing well, but the S&P powering higher, and maybe the banks coming back. Yeah, but I would say even in that situation, we've had plenty of failed follow through days or failed confirmed uptrends. And if everything looks swimmingly and then suddenly say, oh, by the way, Bank of America is going bust, the market probably will sell off on that news. So, I mean, it's if you want to play it, do it tentatively and know that the risks are elevated. You just have to know the conditions, the road conditions, and the road conditions are not really ideal.
Yes, that makes a lot of sense, Ed. All right. Thank you so much. And thanks everyone for tuning in. We'll be back on Monday with more, starting with IBD Live first thing in the morning. So we'll see you 10 minutes before the opening bell and through the first 90 minutes or so of trade to update you on where we're at in this current market. So we will see you there, investors.com/IBD Live for all the details. Hope you have a great weekend, everyone. We'll see you back here next week.